Let's welcome in a fundamental view, R. Sreesankar, Head Institutional Equities at Prabhudas, Lilladher joining in. Sri, morning, thanks for taking the time out today. Before we start talking about markets, managed to take a look at TCS. What do you make of those earnings?
I think it's more or less in line, and rather I would say that our analyst has reduced the earnings guidance a tad for FY17 going forward, mainly on account of the lower utilization levels that we have seen in the current quarter. Because TCS, in its view, reports utilization levels through SGA costs. If the higher SGA costs have gone up, that's what we have seen. It directly reflects into the bench having increased, or consequently the utilization levels having come down. Other than that, not much of a change, except that it has come at the lower end of the guidance.
Okay, a quick check on L&T. Sri, let's get a call from you on L&T. We've seen the battering that the stock has taken, but you know, we've got the monetization of non-core assets. We've got a slow trickle of orders also now starting to come in. Do you see a possible rebound in the stock in the near term?
We like L&T, and L&T is a part of our topic. It is not work though, because we believe they are ideally placed to be the beneficiary of a recovery in the economic activity. But the headwinds that L&T has been facing is, yes, it has got its subsidiaries where they have put in large investments, have not been giving returns that was expected of L&T, of those subsidiaries for quite some time, be it the shipbuilding activities, be it the BOT activities, etc., and be it the metro, be it various projects that they have invested in, have not actually started yielding results, which in turn puts stress on the entire cash flow generation of the parent company. We think selling off non-core assets will be a big positive, and that's number one. Number two, reducing the working capital as a percentage of the turnover again will start to be a big beneficiary. The cash flow increases is going to be crucial. So we are optimistic, and the valuations have become more attractive right now.
Okay, so sounding quite positive there on an L&T. That's Sri's view coming in there. Let's take a look at the pre-open quotes. The top loser right now is TCS, but down by only about 0.5%, and not too much of a rub-off effect. We've got Wipro as well trending a little lower, but that's about it from the IT pack. We've got DCB moving on the back of course, those earnings as well. So that's the earnings action as it's playing out in early trade so far. And a couple of other newsmakers, so Bharti, you know, on the news with regards to Orange in Africa, that one, for example. Crompton as well on the order wins. A couple of those things, some minor moves are coming in. Bharti is definitely the top mover, in fact, on that news so far. So we'll continue to track that. Orange maybe acquiring their subsidiaries in Burkina Faso and Sierra Leone. So that's what's driving that counter this morning. Tata Motors, a couple of those banking names, in fact, are seeing a bit of respite today, and I guess that's where the strength is coming from. Sri, you know, the banking pack has really been giving the markets some serious stress lately. You know, we haven't seen much support there at all. And yesterday, you know, even if you start to take numbers like a Federal Bank, not all that encouraging. Major downgrades coming in as well on some of those names there across the board. What's your view? Are we going to see some amount of strength, or do you see a lot more pressure that's going to come when it comes to that pack?
Again, see, we need to take it from more from the background of what turned it into this environment today, and how we see this scenario unfolding, say, over the next 2 years. Let's take it from there. Number one, at the end of last quarter, we all knew that there is continued to be stress in the banking sector, especially the underwritings that you have done 4 years back, 6 years back, etc. And many of these banks have been flagging off some of the companies in the commodity sector, especially with steel, as classic cases where they have got continued problems and challenges which they have been facing. So that sector has not turned for the better. It has gone from bad to worse, which means that stress will be much more there, and you need to provide. Many banks have actually come back and given their targets of reducing their NPAs. But that's a target. That's an estimate that they have to reduce it. But the reality of what's happening on the ground is different. So the stress will increase. That's number one. Number two, let's even look at the RBI guidelines of saying that 150 accounts and so on and so forth, which probably has got a stress level. So now I would expect to see many of the banks taking a pragmatic and proactive, now with the guidelines coming and with the indication from various angles, to relook at these companies and these accounts and probably provide much more for these accounts in terms of as a bad assets. So even if it was lying as a part of restructured assets, not being classified into NPAs, I would expect in this quarter, in the results, many of them to come into an NPA. Especially, that will be more prominent in terms of some of the public sector banks. So now, the third aspect, you mentioned about Federal Bank, etc. To me, Federal Bank and all is fringe players in even the large corporate accounts of these. So many of these accounts, in the commodity sector, they probably will be a part of the consortium. So now, if they classify it into an NPA, somebody else in the lead bank don't classify it as an NPA. So many of those banks will have to actually start providing. So public sector banks especially will see larger amount of slippages this quarter. Now, coming to the private sector banks, I don't think that to a great extent we will see these happening from HDFC Bank and Kotak Mahindra Bank. That's what the market price movement of these stocks indicate. But in case of Axis, yes, people have their doubts. That's the reason why you are actually seeing stock also underperforming or coming down quite sharply in those kind of cases. So it will be a case wherein Axis, in ICICI Bank, etc., where investors probably look at it and they need to be feeling comfortable at the end of the day with whether these trust accounts or these accounts which has been mentioned earlier, are we going to see a provisioning if they have got exposure in these things? And once that is done, probably uncertainty will be out. What will happen going forward is, till the time that uncertainty remains, I don't think investors will be willing to give a higher price earning multiple or higher price to adjusted book, etc. Because adjusted book itself will be a question mark right now. And finally, the most important point, many of these banks have, the CEOs, MDs, chairmen have gone and given interviews saying that they would like this NPA.
Coming back to, in fact, what we were talking about going forward as well, where do you really see the strength emerging when it comes to markets? Are you still looking at things kind of cautiously when it comes to the near-term outlook? What's your sense?
See, I can't be extremely positive on the market unless I see the world scenario improving quite dramatically. So the basic issue is, I don't think India is going to be the issue per se out here, Indian domestic growth. Indian domestic growth, if you look at those numbers, you were just mentioning about the imports being down in the month of commodity imports being down in the month of December. Look at these import numbers and export numbers. Export numbers have gone below $21 billion for the first time in the last 12 months. Similarly, non-oil imports have actually gone down below the number. That's also somewhere around that first time below that $22 billion number, etc. So what we are seeing is there is a pressure, there is a stress, number one, and your global economy has actually started to slow down. And that slowing down is going to have a rub-off effect in the domestic economy. So my own estimate is that we need to actually start estimating, with commodity prices being where they are, the growth is not, because the global growth is not going to be that stronger, the chances of India growing faster at those high numbers is not going to be there. We need to readjust our growth estimates downwards. That's number one. Number two, we need to keep our eyes and ears open to what's happening around in the globe. So while the oil prices will continue to remain benign, which adds probably closer to 60 billion net, because we've added more than 80 billion. We also export oil. So if you adjust it for it, you probably see a 60 billion plus benefit over the low oil prices. Let's also not forget, inflation is not a bad word at all. Inflation is good when in terms of economic growth and as well as. So when inflationary deflationary scenario starts happening, it's going to be quite pinching in terms of these numbers when we look at it. The fiscal deficit number, etc., will tend to look at a high, because your numerator remains static and the denominator goes down. So you've got an issue which will start to come up from that side. So I don't think that we need to get too much worried on the domestic numbers. I think the direction of the market will, to a great extent, be determined by what's happening around in the globe, and till we see the global investors becoming more and more optimistic on emerging markets, there will be a stress which will remain. Look at earlier, a few years back, we were saying BRICS is going to be the one: Brazil, Russia, India, China, etc., to grow. Brazil and Russia this year also, 2016 calendar year, also will go into a recession. China is going to see a slowdown. The large economies in emerging markets, and South Africa, we all know what's happening to the currency, what is happening to that economic growth. So you've got a problem out there which we need to recognize.
All right, Sri, fair enough. Thanks so much for taking the time out this morning and sharing your thoughts and perspective with us and getting us your views as far as the markets are concerned.